Hi and welcome to this Blueberry Markets video update with me, John Kibler, head currency analyst. In this video we're going to be taking a look at the S&P 500 as we have approached the all-time highs, which Mr. President Trump is very happy about. Now, we have to ask ourselves the question as price approaches a key level: is the market going to break or is it going to bounce? And what does that mean in terms of market sentiment? Okay, because in the event of the stock markets falling, okay, we have what we call a risk off sentiment, which means the safe havens such as yen, Swiss and the US dollar get bought. Okay, so the market moves their money from this asset class into those safe haven currencies. When the stock markets rise, this is when the market is in more of a risk on sentiment, and we see stuff like the dollar fall, yen fall, Swiss fall, and the commodity currencies especially see the benefits, such as the Australian dollar, New Zealand dollar, Canadian dollar. Okay, so if that's the case, what's actually been happening is the Canadian dollar actually has been moving higher quite significantly off this. The only ones, Aussie and Kiwi, are a little bit off, and we are still seeing that little bit of strength from the yen and the Swiss franc. And the reason probably being is the recent sort of happenings in the world with regards to President Trump and Iran. Okay, so the newest sort of update from this is the fact that President Trump has been tweeting saying that he called off a military assault on Iran, and which would have, he reckons, would have killed over 150 people for Iran shooting down their drone, their unmanned drone. Now, this risk essentially will come with its challenges. So if President Trump continues to, hype up this event, or continues to say, or continues to put pressure on Iran, then, we could see a return to a risk-off market, which wouldn't be too bad because the market essentially is at this key resistance level. So we could see a short move from the S&P. Now, if that's the case, then we should see the safe havens rise again, and then we could see some potential moves lower for back up into the level. However, what happens if price breaks higher? Now, this means that the market will be in a risk-on event, and we should see the yen sell-off, the Swissy sell-off, and so on and so forth. We may even see gold sell-off as price continues to rise. Now, gold has been moving higher quite a lot recently, so it'll be interesting to see what happens here. But if the S&P breaks out here, how much further would it go? Now, historically, if we just go take a look at the weekly time frame and look at these, when these kind of events have occurred, the volatility has been extremely large this year. However, we had some volatility back down in 2015, and we broke out, and look, the market rose quite significantly. In fact, if we just take out the breakout in here, the market rose 34% over a couple of years. Again, when we had the little bit of downside back here with regards to 2011, we then broke out of that and again saw a significant rally. And obviously we have the 2008-2009 economic crash, which was bound to be bought up again as prices were down into those key lows. Now, what I'm suggesting here is, if we get a breakout on a weekly close here, how far is the S&P going to go, and how far could it go? Because recession risks will likely continue to rise, as well as other factors. So keep an eye on the S&P here. We actually may get a couple of trading opportunities if we start to see a fall, very similar like we saw back in May 2019. If we get something like this again, that would be good to get on the back of. Or, if it breaks out, then we can look for those long opportunities. But this is a significant area for the S&P 500. Keep an eye on it. We may see some trading opportunities. Thanks for watching. Speak to you.